Okay, so folks, I want you to have, if you have pen and paper, have it at the ready, the levels that I have already put on my charts. I want you to write down or put them on your charts if you have them open. Okay. Now, dollar CAD then. We've seen the dollar, the US dollar is firm, the CAD being commodity currency is weak. So we've had what we had is, and what we were waiting for, the level that we were waiting to break was the parity in the dollar CAD. We had a failure to make a new low here. The structural point was effectively parity. Worst case scenario, we were along at the 100 trade. On Tuesday that broke. I entered that about 10:30 in the evening after the Bernanke speech on Tuesday finished, and the follow through from that was spectacular, coinciding with the declines across the broader markets, the copper and the S&P. With this dollar CAD, it's worth bringing ourselves out to the weekly and seeing the structural long point 103.39. Okay, so we're going to have the structural long, structural short, the short-term long and short points, and the near-term short and long stops. Okay, first of all, in this we're looking for opportunities to buy, essentially. You see the 103.39. Okay, it was the momentum low in this downtrend before we went to the historical lows. So the 103.39 had a momentum push out of there, only to come back, retest the level, and from the 103.39, look in 2008, look what happened. And you see, I mean, this is, so far, this is actually a pretty small reaction. The reason this dollar CAD flew in 2008, this was the credit crisis, and so akin to the risk off environment, we can see what the potential, if a concern manages to materialise and indeed worsen, this dollar CAD is going to benefit. Our job is to look for the points from which we want to be long. If we come to the market right now, okay, yeah, the entry was at parity. We've got momentum on our side. We've had a momentum shift from the 98 area. We're through parity now. Last week's high, barely just managed just above the 103.39. So the structural long point, that 103.39, is on the premises. Okay, so the structural long is 103.39. Okay, here's the daily. Now, looking for a structural short point, we're a little bit away from the mark, given such a strong second half of the week. The structural short, in fact, is actually quite difficult to, well, anything close is quite difficult to spot. Strictly speaking, your structural short is back at parity. This market's extremely volatile. We get back there. I mean, it's only taken 2 days to get up here from parity. There's no reason why we can't get back there, but our bias is to the upside given the dollar strength and the broader market's in decline. So the structural short really, I know it's not anywhere near, but doesn't have to be. It is the parity level. So the 103.39, when we get down get down to the 200 tick chart, okay, the 103.39 is in this period of, let's put it in there, 103.39. There it is. You see how the market on the 200 tick has respected the 103.39. Okay, the 1 day high, okay, just above. So you've got 103.39 hit here, come back and tested it here. So here we've got over 1, 2, 3, 4 sessions. Basically got a consolidation after the impressive move to the upside. This is a clear picture. The long point then is 103.60, indicated by the green lines. When we get to 200 tick, the green lines are the long points. Okay, so you can see them on there before I mention them. This is on every single 200 ticks. I've already put them on there over the last couple of hours. A green line then at the 1 day high, that's your long point, 103.60. The long stop is going to be the 103.39. So you can have your stop at a significant level from the daily, and your long point is the 1 day high, which is the 103.60. So 103.60 and the stop just the other side of 103.39. Again, to the downside, it's a clear level as well. I mean, you've got the 102.05, which is a significant level from the daily. The blue lines on the chart always significant levels generated from the daily chart. So there's always an aggressive option and there's always a slightly more conservative option. In this case, the 102.22 is your short point. If you're a little bit more, I mean, you don't have to leave much on the table, 20 pips or so, before you get to the 102.05, which will be your significant level. So you've got two options that are very close to one another as a short point. The short stop. Now, what we don't want to happen is for the market to break out of the long and short points here and just revert back into the mean. By that I mean this period of consolidation here. So we expect through these levels some long liquidation and stops getting triggered that have bought here and here. So we don't want to give it too much room back up. So we want to accommodate some of these lows. I suggest a short stop at 102.55. Okay, short point 102.22, short stop 102.55, and that will give you what you need in the dollar CAD. So remember though, our momentum precedes price, so our bias is to the upside. Okay. Alright, just going to save this recording, then we'll move on to the Aussie dollar.